Umesh, it's great to have you. I mean, India is really being looked as sort of the next big consumption engine. I have to wonder what you're expecting in this budget. Do you think it'll do enough to actually boost consumption, especially when it comes to the rural population?
No, I do agree. I do expect that this budget will focus on the capex because last one and a half years there has been slowdown in the investment into the infrastructure. India needs infrastructure because India has a vast resources in the hinterland. These need to be linked to the coast, and we need to transform these activities into international activities because that's where major future activity will come from. And Make in India or Made in India have been there for last 4 years. And to fructify that, logistics linkages are very important. I think government is going to put a lot of focus on the execution of infrastructure is what I believe.
Yeah, can you tell us a bit more about that? We were just talking to our colleague about how, it seems like we're at a tipping point where there's a bit of saturation in the amount that they can really spend on infrastructure and whether they can still expand and execute on some of these projects. What sort of specific budget announcements are you thinking in terms of the infrastructure side that you think that, you want to hear most?
It will be mostly on the logistics front. Because India's logistics cost is around 13, 14 now. We need to bring it down to around 8 to 9. That is the goal government has set in. And I think the next couple of years, government will be focusing on that ease of movement of the goods and transformation of raw material into the final product. I think that's going to be the focus. So the railways and the road infrastructure is going to be the main focus.
And also, there's been a lot of, I guess, external sort of, risks out there, right? Especially when it comes to U.S. tariffs on India. That largely has kind of weighed on a lot of investor minds on whether they need to invest in India this year or not. We're still waiting for some sort of clarity on that front. But how have you seen these U.S. tariffs on India exports, Umesh, really affect vehicle financing and demand for it now?
See, basically, if you look at U.S. tariffs that impacted Indian segment or sectors are mostly MSME sectors, which have been focused on U.S. market, especially textile, leather, fisheries. These are the few examples, gems and jewelry and electronics. What I feel is the industry is now looking into newer market. The European trade agreement is some relief for them. And they're also finding a newer market in the Asia. Some of the MSME sector leaders whom I am in touch, they did tell me that they're looking at a new market, and they're quite successful because the December, the IIP number suggests that the manufacturing has increased to 8.3 year on year. Mining has improved, electricity has improved. That means there is increased manufacturing activity in India, and we are able to find newer market. I think U.S. tariff, even though it had initial some kind of a discomfort with many of the local manufacturers, they have overcome to some extent. I think any further improvement of relation with the U.S. only will further improve and help India.
Umesh, I want to talk a bit more about the business as well. Just recently, MUFG, I should say, recently bought a 20% stake of the company. What sort of strategic sort of gaps do you think this investment from MUFG can really fill for you now?
See, we have been hitherto focusing on individual customers, basically new to credit kind of a customers who like to own an asset, whether it's a vehicle or a car or a two-wheeler or some of the businesses. And that's been the focus for us. And we believe that the new investment coming in from the MUFG we'll be able to lower our cost and keep the customer with us, because after being with us for 10 to 15 years, many of the customers, after building a good track record, move on to the banking. And if at all we have a better rating and lower cost of funds, then we can cater to the customer who are leaving us. So I think that is the focus for us. And I believe strongly that around 25 to 30% of my customers who leave us after building relationship with us for 15 years, they will be retained, and that will be the biggest benefit. We will also be able to onboard new customers, because India, if you look at the challenge, it is not just unbanked, non-bank is the, unbanked customer is not the only challenge, it is the underbanking. Many of the customers, they find it difficult to extend their credit or extend their relationship with the bank after reaching a particular size. And we believe that that is the customer whom we can engage with. So there is a huge scope and opportunity in India, especially in the MSME segments, to build business. And we believe that this will help us to lower the cost, because already after announcement of MUFG investment, we have credit rating upgrades received from a couple of the rating agencies. S&P has already upgraded us to BBB minus. It is investment grade. And the Fitch also have put us in the positive watch, and also Moody's. Locally, our domestic rating have been upgraded to AAA by CARE, and other two agencies also have put it in the positive watch. These are all positive for us. If you're able to bring your borrowing cost by 100 basis points, that is going to be a big change, and we'll be able to service our customer much better.
Is this, can you tell us maybe what MUFG's role is going to be? Is it more than just a financial investor, or are they going to have more of a say when it comes to strategy, risk management, or even just governance overall?
See, they are 20%, they're going to be a 20% stakeholder, minority stakeholder. But with their vast experience of more than 100 years and their experience of investment in the other Asian countries, we believe strongly that their experience will help us in the risk and governance and credit policies. And also we believe, being a bank, they have a strong technology platform, which will help us to upgrade our technology platform and digital offering to our customers.
Can you tell us more? Do you think this is more of just a one-off sort of strategic investment for you? Is there more sort of to come in terms of global capital partnerships? And are you actually looking at more sort of stake sales in the future, Umesh?
Currently we are definitely continuing to do the MUFG only, and we would like to build a very strong relationship with our existing the relationship, rather than looking for a new investor right now. I think this is going to be very long term, and as a management group, as a promoter group, we are going to be at 20.4% after the post investment, and MUFG is going to be 20%.
You mentioned a little bit more about the credit profile and the like, and what you've been hearing from some of the ratings agencies as well. I was just wondering, if rates stay higher for longer, how do you think that is going to really impact your borrower profile? Do you think that can still remain quite resilient?
See, our borrower profile, if you look at, that has been improving over the period. India, the way we have grown in the last 20 years, if you see, our borrowers have been upgrading themselves, and they'll be able to buy a newer vehicle or newer assets and upgrade themselves and be more efficient. And that's only going to help us build a better customer profile and bring down our credit cost to some extent. Our credit cost is averaging at around 2%. And as the credit profile of the customer improves, we believe the credit cost can come down further.
Okay. In terms of just this investment, Do you think that this makes Shriram a little bit better positioned in what could be maybe more tighter scrutiny from regulators when it comes to some of these NBFCs here? How do you see that all play out?
See, we are already a upper layer. In India, we have upper layer, mid layer, and base layer NBFCs, and we are already in upper layer. And all upper layer NBFCs are supervised on par with the scheduled bank, if not as closely monitored as the banks. But we have been already supervised. I think that is, and being a deposit-taking NBFC, we are one of the deposit-taking NBFC. We take term deposit, and being the deposit-taking NBFC, we are already in the high scrutiny. I don't really think there is going to be further any increase on the same. But definitely, yes, we are working very closely with the RBI, and we are very happy with the kind of relationship what we have with regulator.
You mentioned a little bit about interest rates. Do you think, by how much do you think borrowing costs can actually come down? What's your forecast?
My forecast is around 100 basis points from now, because incrementally there has been interest rate reduction in India. The repo rates have been coming down. The transmission has been slow. There is further transmission to be happening. That's one advantage. And the credit rating upgrade itself will give us around 40-50 basis point advantage. So together, we should have around 100 basis advantage on our total book. Currently, my book cost of borrowing, if you see, is around 8.69. So around 100 basis point improvement will be around 7.6 or 7.7. So that is going to be a hugely advantage for us to service our customer better.
I just want to talk a little bit more about just the competition too, Umesh. I mean, there's been so much interest in the whole financial sector in India. There's also a lot of banks that are going very aggressively into retail lending here right now. Does this partnership with MUFG at least help you maintain a bit of that market share, and as well as really defending your margins?
Definitely, yes. We will be definitely passing on some of the interest rate reduction to the customer. That is the plan we have. The net interest margin last quarter, it was 8.58. We would be happy to retain anywhere between 8.5 to 9. It depends upon the season to season on portfolio mix. But we are very happy with that kind of a net interest margin. And our customers are not actually a banking customer, but definitely there is an aspiration of our customer to become large and go to a bank by having a good track record. But typically bank onboards customer who have a minimum track record of around 10 to 15 or 20 years. So therefore, there is a gap. So many customers who come into the business freshly and who are there for last 3, 4, 5 years, they tend to go to NBFC, and there's a lot of role to play for NBFCs. The market is very, very wide in India, very big, and I don't really think there is going to be a direct competition with any bank, and we don't really expect a banking customer to come to us at all.
Okay. Umesh, the final question, I'm just wondering, what sort of the financing needs that you need right now? I mean, are there any plans to sort of raise funds through the bond market?
We are not really looking at the bond market now, but yes, the bond markets have improved significantly post the investment for us individually, and also there is some kind of a stability in the market. But I think the liability mix is which we are freshly looking at. We have, if you look at my liability mix, 27% of my liability is the term deposit, that the retail deposit, and another 20% is the bank term loans, and the 15% is the securitization, because that is the cheapest source for us. Domestically, the banks need to lend to priority sector, and they keep buying portfolio from us, that securitization. And another 15% is the NCD, local domestic capital market. and 15% is the international borrowing for us, including syndicated loan and the bond international. So there may be a little delay for us to coming to the bond market. But we will definitely look into a syndicated loan. That has been one of the cheaper source for us.